Alright guys, welcome back to the channel. Today is the day 10 of my trading study arc, and today we are gonna dive deeper into two of the most important factors in smart money concepts. First one would be fair value gaps, and the second one would be order blocks. These two concepts alone can actually change the way you look at the market structure, entries, premium discount zones. So basically, I'm gonna walk you through clear sketches and through the real charts as well. And I'm going to talk about something else, something extra called Gann Box tool, which I personally use and it's extremely helpful. So I'm going to give you my version of the Gann tool, and then I'm going to show you how to combine fair value gaps and order blocks to take high probability trades. So make sure you actually watch until the very end of the video, because at the end I'm gonna talk about something extra, something called hidden order blocks, which most traders don't really know about. Let's start with the foundation. The first one is gonna be liquidity voids. In a trend, either uptrend or downtrend, you will sometimes see the market create a straight sequence of candles all in the same direction. So in an uptrend, it's going to go up. It's going to be a set of green candles, or I mean, in a downtrend, it's going to be a set of red candles. Whenever we see a set of three or more candles moving in one direction without meaningful pullbacks, that is going to be a liquidity void. So a liquidity void happens in impulse moves or corrective moves. It doesn't matter. The key point is that the market is moving too fast, leaving empty space in this move, making imbalances. Now, inside these liquidity voids, price tends to leave imbalances, places where price did not fully trade, and the market almost always comes back later to fill those imbalances. So these imbalances are called fair value gaps, and in short form, we are going to call it FVGs. So right now, when we look at this uptrend scenario, we can clearly see that there's an imbalance right over here, right over here. So this is an fair value gap, or else FVG. And in a downtrend also, we can see that the market has left an imbalance. So right over here, this is going to be a fair value gap. So we'll just mark this out so it's easy for you guys to understand. So there you go, these two are FVGs. So let's go to the live market to identify some of these fair value gaps. So first of all, we need to see whether it's a we need to identify a liquidity void. So right now, let's go to a higher time frame, and there you go. Right now, we can see right over here that this is a liquidity void. Right over here, so you can see that it has made in an uptrend, it has made several four candles of green candles, and in this movement you can clearly see that it has made an imbalance. So right over here, there you go, that's an FVG, a fair value gap. Okay, so this is in an uptrend scenario, and just right after that the market has made another imbalance in the downtrend right over here in the correction movement, and in this liquidity pool, there you go, it has made this FVG. And just like that, the market has kept on making FVGs at several points. And right over here, there you go, that's another FVG. So just like that, the market keeps on making FVGs. So let's get into the next lesson. Let's talk about the Gann Box tool. A lot of people use it incorrectly, but if you apply just I'll show you the settings right now. Let's go to the tool itself. So right now here, this is the uh, tool I'm going to use with these settings. Let me show you the settings as well. So there you go, this is the settings. So just I mean, if you're following SMC, this will be extremely helpful, because I'm gonna talk about premium zone, discount zone, and all that, like how to get in on a trade using SMC. So in a later video, so just keep this settings saved, so then you can use this. There you go, this is the settings, and then this tool should look like this. So, I mean, you can draw this in two ways. So right now the zero level is right at bottom, and then we can use the zero level at top level as well. So it doesn't matter, the main thing is the 0.5 level comes in the same level. So that is the main factor we are looking for. And now let me tell you guys how to use the Gann box in an FVG, in a fair value gap scenario. So right now this is a liquidity pull in an uptrend. It has made three candles giving us an imbalance. So let's mark that out. This is the FVG. So what we are going to do is we are going to use that Gann box tool, and from this the lowest point of the FVG, we are going to draw the Gann box until the very top where it ends. And right now you can see that this 0.5 level is right at the half level of the FVG. So what the market tends to do is sometimes the market keeps on going up, leaving this FVG open, and the market actually, let's say the market goes up and sometimes comes down by breaking this these two levels, but not breaking the 0.5 level. It just keeps on going up. So right now I'm going to show you what a valid FVG and an invalid FVG is. So if the market breaks like this, an FVG, by not actually going past this 0.5 level, by only just tapping the top half of it, that FVG is still valid. So there is a high possibility of the market actually coming towards this 0.5 and 0 level right over here, and maybe going up, or else it's going to go to an order block somewhere over here, somewhere in the like right below the market, and then going up. So what I'm trying to explain is, so let's get rid of these two. So let's say the market is giving us an FVG somewhere over here, and we put the Gann box tool, and now we know for where the 0.5 level is. So let's say the market goes up and then comes back down, hits this level between 1 and 0.5 and goes up. We do not take trades. We do not consider this as an invalid FVG. We still keep in mind that the market has not still broken the 0.5 level. So we wait patiently until it hits this level, this 0 and 0.5 level. So right now, there you go, right now this is still a valid FVG, still a valid FVG. Okay, still a valid FVG. So let's say I'll show you the next scenario. Let's say we mark the FVG over here, and then we put the Gann box tool. There you go. So let's say if the market it goes up and comes back by breaking this 0.5 level and then goes up, then this is an invalid FVG because it has broken 0.5 level of the Gann box tool. Basically it has already hunted all the liquidity it made by this imbalance. So this is going to be an invalid FVG. There you go, these two scenarios. This is how we identify a valid FVG and an invalid FVG. So if the market gives us this move, this There you go. Then we know that it's a valid FVG. So what we are going to do is we are going to wait patiently until the market comes back down. The market might turn from here until it hits 0.5, between the level 0 and 0.5, but I highly doubt it, because I'm pretty sure if it made a BOS somewhere over here, it's definitely going to go for the order block. I'll talk about that later, but just keep this in mind. If the market has not broken half of it, gone below the 0.5 level, then it's a valid FEG. So the market is likely to go come back down again and fill this imbalance. And if the market has already gone below the 0.5 level, then it has made that FVG invalid. So the market is not going to come back down. And previously we talked about the bullish setup. Right now let's talk about the bearish setup. So in this liquidity pool, we can clearly see that it has made an imbalance right over here. This is a fair value gap. And then what we are going to do is we are going to draw the Gann Box tool. There you go. We can see the 0.5 level clearly. So what the market does is sometimes the market actually comes here and then taps between this 1 and 0.5 level and just gives a small push. A lot of traders think that it's going to be bullish, but what the market does is it goes back down. Either it pumps from here, or else what it's going to do is it's going to go hit some kind of an order block somewhere way below and then pump up. Okay, so what this move, we have to be extremely cautious, because these 2 points are where we're gonna get into trades. So we'll talk about that later. So always keep this in mind. If this is the way the market has played out, it has not broken half of an FAG, then what we are going to do is we're going to wait, and because we are 100% sure that it's going to come back and fill those imbalances. So this is a valid FVG. Okay, and then let's talk about the other scenario. This is going to be, so right now in this liquidity pool, we can see that this is an FVG, and we're going to put the Gann Box tool. So there you go, we can see the 0.5 level clearly. So if the market gives us some kind of let's say it gives this move, and then it has actually broken way above the 0.5 level, so we can see that. And then this, just like before, we can see that it has gone a bit higher than the 0.5 level, complete in this imbalance. And then what we are going to do is we are going to identify this as a invalid FVG. There you go. So this is how it works out in FVGs. So let's go to the live charts for me to show you guys that this actually works. So right now this is we are looking at an example in BTC. So right now we can see that there's a FVG right over here. So we'll mark it out. We'll mark that out. This is an FVG. I mean, sometimes it actually comes, the market actually comes always near the 0.5 level and it just goes up. But mostly as SMC traders, we always wait until the 0.5 level to be broken. So that's safe for us. So let's get into another trade. There you go, right above we can see an FVG. There you go, let's mark it out. So this is the FVG, and we are going to use the Gann Box. There you go. In the first retest, we can see that it has not broken the 0.5 level right over here. So this is the 0.5 level, but it has retested somewhere over here. Even though the market went up, the market eventually came back down, breaking the 0.5 level, and then it kept on going up. There you go, kept on going up. So that's how FVGs work. So this is in an uptrend. So let's talk about an example in a downtrend. And there you go, this is an example in a downtrend. So right now we can see that this move is going to be a liquidity void, and right now here it has made several imbalances, but right over here it has given a huge imbalance. So let's mark that out. This is a FVG. Okay, and then let's draw the Gann box tool, and there you go, it has completely broken that 0.5 level with a wick, and then the market straight away went down. Yeah, that's a good example for the use of FVGs and the use of Gann box tool in a in the live charts. And then let's jump into order blocks. These are one of the strongest SMC concepts. And order block is the last down candle before an uptrend break structure, or the last up candle before a downtrend breaks structure. So in simple terms, in an uptrend, the OB is the swing low that caused the BOS. In a downtrend, the OB is the swing high of that caused BOS. So let me sketch it out for you. So let's talk about the uptrend scenario first. So this is an uptrend. We can see clearly that it has made high highs, high lows, high highs, and then clearly it has broken the previous low. So that gives us a confirm where we are going to indicate this. So this part is going to be a swing high, and this part is going to be a swing low. Okay, so right now it has broken structure and it has kept on going up, so giving us a confirmation that it's a valid BOS. So there you go, this is a valid BOS. There you go, this is a valid BOS. And then what we actually need is the swing low. So these points, I mean, there's this whole theory of how an order block makes and all that, like that. We actually do not need those. If you can identify an order block properly, that's all we need to get in a solid good entry. So let's, in an uptrend, always keep that in mind. I mean, in every uptrend or downtrend scenario, if a BOS is made, I've told you guys, in an uptrend BOS, the main point is swing low, and in a downtrend the main point is swing high. So right now we do not need this swing high for now, so let's get rid of that. So we know that this swing low is the main point we need. So right, this point is a main point that we are going to talk about. Okay, so let's keep this. Okay, so right now, sometimes when the market goes making high highs, high lows, high highs, high lows, it gives a BOS, and right now the BOS is confirmed. What the market does is it gives us a candle right over here. Okay, it can be some, I mean, it can be some kind of a candle. It can be like this. I mean, I'm gonna give us a normal V of a candle. Okay, so it can be like this. So right now, this swing low of an uptrend BOS, confirmed uptrend BOS, is gonna be a order block. Okay, so what we are gonna do is we are gonna draw this. The lowest point of that BOS is gonna be a order block. Okay, so we mark that out. We mark that out because at some point the market is going to come back down, hit this order block, and then keep on going up. So it's gonna, what it's gonna do is the market's gonna straight away come to this point, and then the market's gonna go up. So that's why order blocks comes in handy, because these are the points where SMC traders take trades. These are extremely powerful. Okay, so always keep in mind, I mean, this is the order block that we are this is which is extremely important in SMC. In a confirmed BOS, the lowest point of that uptrend BOS. Okay, so there are a few other stuff that we're going to talk about. Just keep this in mind. This is the default version, the basic version of an order block, or else we call it OB as well in short form. So like I said, don't overcomplicate it. The OB is where big money placed their orders. So what we are going to do is we are going to use their move and make us some money. And something else which you need to get into your head is the color of the OB candle does not matter. I mean, I previously I said that this is an uptrend move. Even though it's an uptrend move, this does not have to be a green candle. This can be a red candle as well. But the most important thing is you need to get the lowest candle of that BOS in an uptrend. So that's what we are looking for. And then like I said, these OBs can only happen in the lowest point of an uptrend confirmed BOS. But like I said earlier, we need to be extremely cautious of FVGs in these moves. So like I said earlier, the FVGs can happen in both scenarios, in the correction move or else the impulse move as well. So but right after this confirmed BOS, the only thing that we are looking for is the FVGs made in this impulse move, and then this order block, the swing low of the uptrend BOS, and all the FVGs made in the impulse right after that. Okay, so let's say right after making this BOS, it has made a valid FVG. So if the market has made a valid FVG right after making a BOS, this lowest point of that BOS becomes extremely powerful. So even though the market made let's say somewhere over here an FVG, so let's say the market made an FVG somewhere over here, even though the market made an FVG, I mean, we know that at some point the market is going to be coming back for these imbalances, right? Let's first I don't want to confuse you guys. So this is an FVG and this is the OB. Okay, so this is the OB. So let's say what the market's going to do is it has made this BOS confirmed, and then it went up, and what the market's going to do is it's going to come back, fill this FVG, and then it's gonna show all the other traders that it's about to go up, even though it pumped up. Like I said earlier, when the market makes a FVG right after making a order block, making a BOS confirmed, this order block becomes extremely powerful. So the market is going to be coming back towards this order block, and then only it's gonna keep on going up. So from this FVG, it has pumped a little bit up, given some of the traders a bit of hopes, thinking that it's gonna go up. So some traders gonna take long trades. So hunting the SLs, the market is going to go below to this OB, and then it's going to go up. So what I personally do is I basically put my limit orders to this lowest point of this the highest point of this OB. So right over here, this line, from this line is going to be my limit orders. So right now I've told you guys, if the market creates an OB and then right after that forms an FVG, that order block becomes extremely powerful, and the price might react to the FVG with a small pump or dump. then return to the OB, and finally continue the main trend. So in this we talked about in the uptrend scenario. So I'll talk about this order blocks in a bit, and just like that, in the downtrend scenario also it's going to be the same thing. Let's say right over here we can see that the market has made lower lows, lower highs, lower lows, lower highs, and then it has given us a confirmed BOS. There you go. This point is going to be the main point we are going to talk about right now. Okay, so this is the BOS confirmed. This is going to be the swing high of that BOS. So let's get rid of that. So right on this, right at the top of this trade, the market can give us, market usually gives us a candle, something like this. I'm just gonna draw something like that. For now, I'll talk about that candles in a bit. So right now, like I said earlier, this point is gonna be the main point that we are gonna use as the order block. So we mark that out throughout the market. Okay, so what the market's gonna do is market's gonna go up, and then at some point it's gonna go back down, hit that order block, and then keep on going in its original path. Okay, it's just gonna go down. So because this is in a downtrend, so like I said earlier, in an uptrend, right after a OB order block, after making a BOS, if the market gives us a fair value gap, then this order block becomes extremely powerful. That was in an uptrend. So just like that, it happens the same in the downtrend scenario as well. So right after making a confirmed BOS, let's say in this impulse move there's an FVG, then this order block becomes extremely powerful. So at some point the market's gonna come back towards the FVG. So let's say the market gave us an FVG somewhere over here. Okay, so somewhere over here, what the market's gonna do is market's gonna come here, and then it's gonna give us a small pump and then go back down towards this order block and then dump further. Okay, so that's what's gonna happen in this scenario if this becomes a FVG. This is the OB. Okay, so I don't want you guys to confuse yourselves. So this highest point of the BOS is going to be the order block we are looking for, and right after making that order block, let's say if there's an FVG, then the market's going to come back down, wait for goes for a small dump, and straight away go to that OB before going in its original trend. Okay, then let's talk about the order block candle types. So there are different types of candles in these order blocks. So let's say, right now I'm talking about the small candles, these kind of candles. So let's get into that. So sometimes in an let's say in an uptrend, so right over here in an uptrend, this candle can differ. Right now here it looks like this. Sometimes it can give us a huge candle without anybody giving us a lot of in higher time frames. If we find a, let's say in 4 hour time frame or daily or weekly, let's say in a higher time frame, the lowest point of that uptrend BOS, the order block is going to be extremely long, giving us a huge candle. Let's say from this candle to this, the whole length of this candle is going to be extremely long. Let's say right now, let's measure it for now. Okay, so right over here, let's say it's 6 and 7.5 4%. So that's extremely I mean, it's a huge order block. So what we are going to do is we are going to use that Gann Box tool to get half of that order block. Okay, so what we are going to, I mean, when we are drawing this order block, we are going to be extremely precise. So what we are going to do is we are going to go to this wick, not the body. We are going for the wick. If there's a wick, we are going to go for the wick, and if there's no wick, then it's fine, go for the body. So right now we are going to be precise right over here. So then the order block is going to be the lowest half. In an uptrend, it's always going to be the lowest half. And there you go. This is going to be a order block, the lowest half of that OB, this whole candle. Because this candle is extremely long, we are going to go for the lowest half of it. And then the market is going to definitely go below this 0.5 level. And what we are going to do is we are going to wait patiently until it hits that level. So there is another scenario. So this is, first off, we talked about this long candle scenario. But sometimes the market gives us a different kind of candle, giving us a huge wick itself. So let's say the market gives us something like this. There you go. The market gives us a candle like this. The candle body is extremely small, but the candle wick is extremely long. Okay, so what we are going to do is we are going to neglect this candle body, this small candle body, and we are going to go for the candle wick. Okay, so we are going to go for the candle wick. Let's say it's a green candle. Okay, so what we are going to do is we are going to go for the candle wick, only the wick part. Okay, so this part is going to be a order block. Sometimes if the BOS you have confirmed is in a extremely higher time frame, what we are going to do is, I mean, we can go for the, let's say from here to here, there's also 9 or 7 to 9% of a length. Then from this level, get the Gann box. What I do is get the Gann box. Sometimes you can draw from the top level to the bottom. That's fine. If it's extremely, I mean, we don't have to. The more you try to sensate, the less of a chance you have to get in on a trade. So just go to the top wick and go to the bottom wick. What I do is sometimes I go for half of that wick itself, and then place that order block somewhere over here, or else you can, like I said, you can go for the top wick, because this from here to here there's a small gap, so that's fine. Right over here, leave that there, and then use this half as the order block. Okay, so right now I've talked about all the different scenarios, different types of candles where you can find at these bottom levels of these BOSs in an uptrend. So all these keep this in mind, and these are going to be the same in a downtrend as well. So let's get into that as well. So right now, there you go. Let's get rid of these. So in this scenario, I have given you a small normal candle at the very top of this BOS at the swing high level. So let's say it gives us a huge ass candle, something like this, with a small big. Okay, so what we are going to do is, I mean, right over here we can see that there's a huge percentage. There's 7, almost 8% of a long candle. So that's too much. That's too much for a order block, because we have to leave a bit of a gap for the SL as well. So I'll get into that. So what we are going to do is we are going to use the Gann Box tool, go for the top wick and to the bottom wick, and right over here. So previously in an uptrend, I said go for the lowest. So in a downtrend, that changes. We are going to go for the top half. Okay, we are going to go for the top half. Always be precise when you're drawing this Gann Box tool. Okay, So there you go. This part is going to be a order block. Okay, extremely easy. Nothing hard. Extremely easy. So let's get into that other scenario where the market gives us a huge wick, something like this. So red candle. This is the wick. So what we are going to do is we are going to neglect this small candle body. We are going to draw the order block box to the wick part only. Okay, this wick part only. So let's say even after drawing that, if you feel like it's too much leverage over there, what we are going to do is we are going to use the Gann box from the top level to bottom. We are going to go for the top half. Okay, we're going to go for the top half. But even after that, if you feel like it's too much leverage, bring this Gann box to only the wick. Okay, so as you guys can see from here to here, there's not much difference. So always I think it's better if you guys can go for the whole wick, whole candle. Then it's easy and you're not going to miss any trades. And then I will show you guys where to put your entries and where to put your stop losses for now, but do not take any trades. This is me just giving you guys an example. Okay, where to put the stop loss. The main point that you need to get into your head is where to put the stop loss. Okay, I'm going to show you. So right now what we are going to do is, I mean, let's say this part is not there yet. So this part is not there yet. Okay, this part is not there yet. So what we are going to do is, I mean, right now, right over here, it's an uptrend BOS. So the market is going to be in an uptrend. So we are definitely going to go for longs. So right over here, we are going to leave our, so this is the OB from the top point. We are going to leave this long. So the length, I will be talking about the TPs later, but always keep this in mind when you're putting your stop losses. Do not have a tight stop loss right over here, because the market tends to hunt this low sometimes, because the market knows that a lot of traders keep their stop losses extremely tight. So it's definitely going to go and hunt those stop losses. So that's why I always tell every single person I know, always keep the stop losses a bit lower. Give it some space, so then the market can actually freely do its move, and then it's gonna go up. Okay, so the market's gonna come back down, do its thing, and then keep on going up. So give it some space. Do not have a tight SL. That's the main thing. Do not have a tight SL. Give it some space. Okay, so this is an uptrend scenario. So let's talk about the downtrend scenario. So what we are going to do, I mean, definitely we're going to go for short positions. So let's say this move is not there yet. So the market is here, and the market eventually comes and hits this FVG, goes for a slight pump, and then goes for this. So before that move, what we are going to do is we are going to go for the short position right over here from the top point. From Be extremely precise. Okay, sometimes it might just hit with a small wick and then keep on going down, up or down, depends on the trend. So this is going to be our trade. The TP levels I'll be talking about later. Just like I said before, do not keep your stop losses extremely tight, because the market tends to go for, sometimes it likes to hunt these highs, because this is in a downtrend. So always bring that stop loss a bit higher than that. Just give it some space. Okay, let the market play out. I mean, if we are not trying to make big money, we are trying to play the market. We are trying to go with the flow, right? I mean, this is an extreme setup, a good setup. If you catch it right, you can actually make a good amount of money. So give it some space. Okay, and then let the market play out. What the market's going to do is it's going to go for this order block, and then There you go. That's what it's gonna do. Let's go to the live charts for me to show you guys, because this is in an uptrend. I'm right now. I'm in the daily time frame. So it has been in an uptrend for some time now. So when it's like this, I mean, we can surely get into on a good long setup. So right now we can see that it has giving us high highs, high lows, high highs, high lows. But right now, sometime before, I mean, it has made, sorry, it has broken this low, broken this low, and this is a BOS. We mark that BOS right over here. Okay, and right now we can clearly see that it has given us a order block somewhere over here. Yeah, somewhere over here. There you go. The market came back down, gave that slight tap of a wick to that order block, and right now it's trying to push up. Yeah, that's a good example for a BOS order block. Okay, so this is the order block, the lowest point of that BOS. Yeah, we'll talk about that in a later in a different video. In the future we'll be talking about getting into a bit deeper, because we have to talk about confirmation, like a lot of stuff is there to actually we have to talk about. So we'll leave that for now. So this is a good example, and this is a good order block. And now let's talk about something advanced called hidden order blocks, hidden OBs. And these are order blocks that happen within the impulse, not at the swing high or swing low. So in an uptrend, if you see a push of consecutive green candles, but inside that sequence you find one small red candle, that can be a hidden OB. Okay, so there are a few conditions we need to check. So let's talk about that in an uptrend first. So right now, I mean, as you guys can see, there are a set of consecutive green candles in an uptrend, and there's a set of consecutive red candles, but within those we can see two different types of candles. So if let's talk about the uptrend scenario first. So in an uptrend, for a hidden OB to happen, that hidden OB should be in a red candle. So in an uptrend in an uptrend, the hidden OB always should be a bearish candle. Okay, so right now we can see within these green candles there's a small red candle which is like almost hiding, right? So there are, like I said earlier, there are two different conditions that we need to check before we claim it as a hidden OB. So the first one should be, it should not have been hunted by the candle immediately after it. So the liquidity made by this candle should not be hunted by the candle made right after it. Okay, so this candle should not hunt the liquidity made by this bearish candle. Okay, so if it's hunted, if the liquidity has been hunted, then it's not a hidden OB. So that's what we need to check. So this, we can clearly see it has not gone below this wick, it has not hunted. Okay, and the condition 2 would be, this hidden OB, this bearish candle must have hunted the previous candle's liquidity. Okay, so we can clearly see that this red candle has hunted the liquidity made by the previous candle. Yeah, there you go, it has hunted this, the liquidity made by the candle previously. So always keep that in mind. Let's type it out for you guys. So if it fails either one of these, it is not a hidden OB. So this is extremely powerful. If it has made a hidden OB, there is a tendency that the market actually comes and can actually reverse entirely from one of these hidden OBs. So this is an example in an uptrend. Okay, so this is going to be the same for the downtrend version as well. Same logic. A small green candle inside a, let's get into this. So let's say a small green candle inside a sequence of red candles can be a hidden bearish OB as long as it did not get hunted and did hunt previous candles liquidity. So this is in a downtrend scenario. It has made a consecutive set of red candles, but within those we can see a bullish candle, a green candle. So this should be a green candle. It cannot be a red candle. It should be a green candle. So right now we can see that it should not have been hunted by the candle immediately after it. So we can clearly see that this candle has not hunted the liquidity made by the green candle, and then this green candle has hunted the previous candle's liquidity. So there you go. This is a good hidden OB. So to recap what we've done so far, so we basically talked about FVGs made in liquidity voids, and market often returns to FVGs to fill those imbalances. And we talked about that Gann box, the 0.5 level of the Gann box is your confirmation tool when you're like trying to find a valid FVG and an invalid FVG. And order blocks are made either swing lows of uptrends or swing highs of downtrends, BOSs. So those are extremely powerful. Always keep that in mind. And the candle color of those order blocks does not matter. Yeah, does not matter. And combining order blocks plus FVGs, high probability setup, the OB becomes extremely powerful. And something I almost forgot to mention, higher the time frame, the more powerful the order block becomes. Always keep that in mind. And sometimes at some kind of scenarios, the market tends to keep on retapping the same order block several times. This weakens the order block. Always keep that in mind. There is a slight possibility that it breaks and goes and reverses the trend, but if it does not happen, then you're safe. And hidden OBs appear in impulse legs if liquidity rules are satisfied. So sometimes just keep this in mind. Retail traders do not see these coming. Hidden order blocks, if you see a hidden order block in a higher time frame, that means it's extremely powerful. Okay, so this is a lot, so rewatch it if you like didn't get anything. Mark these down, I mean note it down, because this is a good lesson. And if you found something valuable in this lesson, drop a comment, smash that like button, subscribe, share it with your friends if they're actually interested in trading. And thanks for watching.